No.
Good morning, everyone, and thank you so much for being here today and spending an hour with me and being at this great technical event throughout today, not only today, but in the upcoming days. Today, I will be talking about Fibonacci since this is a very technical event. I decided to talk about my application of Fibonacci and Elliott waves. And in fact, I do use a hybrid Elliott waves. It's something that it's much easier to see on charts. It doesn't require to watch all the waves in progress, and it definitely narrows down the entries with a lot more accuracy. So today we will be talking about Fibonacci and Elliott wave strategies. Before we continue, I just want to present the a quick risk disclaimer. This is mandatory, so all information provided by us is for educational purpose only, and I'm pretty sure that everybody's risk is different and may not be suitable for all investors because you could lose money. Trading involves a really high level of risk. So before deciding to trade, you should carefully consider your objectives, level of experience, your education, and your risk appetite. For those of you that don't know me, my name is Anka Metcalf, and I'm a professional independent trader that is focused on day trading futures, which I have been doing for the futures and stocks for the last 20 years. I have been day trading futures for about 10 to 15 years, 10, 12 years now, I think. And that is coming after a very long period of time in which I have been day trading stocks. All in all, I have over 25 years in the market spent. Prior to becoming a professional independent trader, I come with 10 plus years in investment banking. I'm the founder and CEO of TradeOutLoud.com, which is a trading education firm that is specialized in educating individuals how to day trade, swing trade, and also invest in any markets. I have been doing Forex as well, Mason. I focus on high velocity moves. I'm a high velocity move expert, and today I will be sharing with you guys a little bit more on where you get these high velocity moves. I'm also the designer of an institutional proprietary trading system that is based on price support resistance. And when I say price support resistance, I mean the 8 layers of price support resistance. I'm also focused on specific trigger times, especially when day trading. For example, I use 3 primary major trigger times in the New York trading session. When I trade, I focus on the power hour. So my focus is into the first hour of the trading day. That is psychologically is one of the best times to focus on trading because it comes in the morning. Your brain is so refreshed and it's really well rested after a good night's sleep. And not only that, but we focus on the power hour, which is basically the first hour to 90 minutes of the day, and which by studies and specialists have found, and I mean brain surgeons have found that the brain cannot function with a focus more than 90 minutes a day. And after that, you need to go on a break. So it's not possible for you to go continuously 8 hours in front of the computer because you're not going to have the same focus. Your brain is going to go on a commercial break. It's going to try to step away from what you're doing at that moment. It loses focus. Then that's when you're going to pick up the phone, look to see if you have any messages, go on TikTok, go on Facebook, go on Twitter, etc. I also focus on specific price zones. So these specific price zones are the institutional best kept secret, because these are the areas where institutional traders leg into trades and scale out of trades. I also use multi-time frame correlation. I also have signals that are derived from higher time frames that are highly impacting the minor time frames, and therefore my signals are very clean, clear, and therefore after the trigger you can expect velocity to happen. Like I said, I'm using an Elliott wave hybrid, which is a combination of price action reaction into the Elliott wave context. And that for me assures and provides me the forecast. Plus, I use some very easy to use simple moving averages that you guys are going to see in a moment. I use major and minor support resistance plus timing. So it sounds complicated, but at the same time, it's super easy. And in fact, today's session is going to be more application than slides. So I'm pretty sure you guys are going to enjoy it because this is how you learn by studying charts. For those of you that want to stay in touch with us and want to learn more about Trade Out Loud and what we do at Trade Out Loud, you could head on to our website, or you can head on Facebook, on X. On X, I do post tons of trading ideas, so you can head on there, YouTube and LinkedIn. So because I'm pretty sure every presenter today and tomorrow in here is going to talk about Fibonacci, and they're going to try to explain what Fibonacci is. What I did is I have a sheet prepared for you guys. It's actually a blog post from our website, and you could go to this little link right here. It's bit.ly/TOL-FIBs. So you can learn more about Fibonacci's, like in the classical sense, and what they do for the market, what the levels are, etc. But we're going to talk about these levels as well in here. So we're going to start with a little bit of introduction to Fibonacci's aside of what we have and what I have discussed into the blog post, and pretty sure everybody in here is very familiar with what a Fibonacci is there. But I want to share how I'm applying them and for what I'm using Fibonacci's, because I don't use Fibonacci's every single day, and I don't use them definitely for my day trading activity. I only use them in case of a market collapse or in case the market runs, for example, I don't know, 1,000 points in the Dow. Okay. So I use to predict how far the price might retrace or extend. So a lot of times I find that traders do not know how to appropriately apply a Fibonacci tracing tool and how to use that tool, because they start using it in the middle of price action, and that is completely wrong. So for that, I want to make sure that everybody in here understands that you can only apply Fibonacci's when you have a confirmation of a pivot low and a confirmation of a pivot high. Now, for those of you that are very new to trading, a pivot is that rotation. A pivot is when the red bar takes out the when a green bar takes out the red bar high, or the other way around. So it's either into a buy pattern or a sell pattern. It comes down to the very, very basics of candlesticks. So when you have that rotation happen and confirm, that is when you can start using your Fibonacci tool. But you need to have these 2 points, because, for example, I'm going to show you on charts. For example, if you have a pivot low and you don't have a pivot high, and thinking that, oh, what if the price is actually going to reverse from here? You don't have any confirmation. So you're applying the tool wrong. So it's a great tool to have in your trading toolbox that could actually predict targets beyond all-time highs. And for example, we had all-time highs in the Dow, we had all-time highs in many stocks. And that is a great tool to get those measured moves. And this is something that a lot of algorithms are using, and a lot of institutional traders base their decisions off, and also hedge funds. It's also a great tool to have to forecast the possible retracement. Now, remember, based on price action and on the narrative and in which the context in which we're trading, the reaction of the price should be observed around these levels, but by not any means they should be areas where you buy or sell assets. This is just an observation zone, and much more confirmation is needed to place on a trade. Now, The most popular ratios for fibs are the 23.6, which is super, super, super powerful. It is a news-driven market pullback. So for example, Fed printing money scenario, you're going to see the market skyrocketing higher and just producing very shallow pullbacks. And that is the 23.6. Now, the next one is considered the shallow retracement, which is the 38.2. Then we have the 50%, which is not a fib. The 50% is just a retracement from the swing high to the swing low. That's all that it is. And it's actually pointing out that midsection. And then we have the 61.8%, which is called a deeper retracement. And actually before, 2000, 61.8% was actually considered that not the shallow retracement, but it was considered a healthy retracement. And it's actually the golden mean. And then we have the danger zone. The danger zone is the 78.6%. And that is the line in the sand. That is the last shelf of support before a full retracement back to the pivot low. So these fib zones serve as alerts to watch for possible areas of price resuming its previous trend. But you need to use the Fibonacci alongside with pattern recognition and multi-time frame recognition as well. Now, how to calculate Fibonacci retracement for uptrends and how to calculate fibs for downtrends. This is very important because, like I said before, many traders do not know how to appropriately calculate these fibs. First of all, you need to have an uptrend in order to calculate the retracement. So the price needs to go from a point A lower to a point B that is higher. And once you have the confirmation that here you have a pivot and here you have that little hat, that little rotation, then you take your tool out and just clip it to the lowest point of the pivot, clip it to the highest point of the pivot, and then the fib is going to do its job and it's going to release the pivot points. Okay, so it's not hard. So the tool is going to do the work for you. And now depending on the price action, so for example, now we could get a shallow retracement. We're going to talk about the Qs. We're going to talk about NASDAQ futures. And if you have any other ideas, and if we have enough time by the end of the presentation, feel free to throw it in the room and I'm happy to take a look at that so you know how to calculate it appropriately. The good news is that you also have access to the recording, so you're going to be able to access this workshop, this 1-hour workshop that I'm doing with you guys today. So again, the retracement from the swing high to the possible retracement levels will calculate the area of strength or relative weakness or even weakness within the move from the swing low to the swing high. So in an uptrend, you always go from low to high. Now, what happens in a downtrend? In a downtrend, you're going to go because you're having a point A, which is higher, much higher, and you're having a point B, which is lower. You're going to calculate from the swing high and you're going to click to this very swing low. And therefore, you're going to get these Fibonacci tools that are going to show you whether the price action is going to let's say retrace, or if it's going to squeeze, if it's going to do a counter trend to the first level, second level, third level, fourth level, and so on. But again, here, once you're noticing if you're getting let's say a shallow pullback, notice the price action, because remember, these are levels at which you could focus, but these are not actionable levels, because I find a lot of times that the price action, if you're trying, even in a relatively very weak market, if you're trying to take a trade right off the fib, you're going to see it run into the next level. So you need to have a confirmation of pattern. That is the buy pattern or the sell pattern that I'm going to show you in just a bit. So before you actually start tracing Fibonacci's and you actually look at Fibonacci's, first of all, you need to identify the trend. And to identify the trend is not hard, because you need to have a low, so a bottom, and you need to have 2 higher highs and 2 higher lows to have the confirmation of an uptrend. That is the pure definition of an uptrend. A lot of traders say, hey, you need to have a sequence of higher highs and higher lows, but how many? What is the sequence formed? So bottom line is that the best definition of the trend is to have a bottom in, 2 higher highs and 2 higher lows. That's all you need in order to start taking longs with confidence. Now, for the short side, you need to have a top and 2 lower lows and 2 lower highs in order to have that confirmation of the downtrend. So once you know in which trend the price is trading, that is when you know what tool to use, whether you use the Fibonacci tool to retrace from low to high or from high to low. So for uptrends, you go low to high, and for downtrends, you go high to low. So understanding the trend is very important in using Fibonacci's. And I find that beginner traders that don't have a really good understanding of trend and what a trend is formed by have a very hard time in using the Fibonacci tool, and might as well stay away from it for a while because this is not a great tool to be used by beginners. Now let's take a look at some live charts in the Qs, the SPYs, for example, Apple and Meta. And if you have other suggestions, feel free to post them right here. I'm more than happy to look at these charts as well. All right, so we're going to start with the Qs. First of all, I'm going to squeeze this chart up. This is a daily chart of the Qs, right? And I'm going to squeeze it, squeeze it, squeeze it. And I'm going to ask you guys, please tell me, what trend are we in right now? Okay, is this an uptrend, type of 1 for uptrend, or type of number 2 for a downtrend? Perfect. That's right. We have an uptrend. We are in a very strong uptrend. So the Q's daily uptrend. How about the weekly chart? Can somebody tell me what kind of trend we are in? I mean, we could see a point A, boom, and a point B higher. Absolutely, we're in an uptrend. How about the monthly chart? Can somebody please tell me what kind of trend we are in right now? Perfect, you guys are rocking. All right, I'm gonna tell you now a quick tip on how to know if the price action is in a power trend. Would that work for you guys? Would that make you like, wow, this is gonna be amazing, I'm gonna know what a power trend is? All right. So a power trend is when the price action is sitting above the 10 exponential moving average. A regular trend is when the price is trading above the 20 simple moving average. Tell me if that was easy. Okay, so trading is actually a lot more easier than you guys even think. And you know actually more than you get credit for. So we're noticing that the Qs on the monthly chart are in a power trend. So you can see here that within the last, let's say 3 months, the price action has done nothing than going back and forth a lot, right? So this is 3 months of trading activity. This is basically this past quarter, right? We're living right now into the last month of the quarter. We're actually going to have at the end of the month, the end of the quarter, right? In which we currently didn't have really a significant action in the market. Because if we are to become bullish with velocity, what would we need to have? We would need to have a rotation. How would the rotation kick in? If this candle right here, and because this is a monthly chart, this candle right here would have to actually take out the prior candle high. And this would mean that shift, right? So we would shift from bearish to bullish if we take this doji high. And that would put the price action in the Qs back into a forceful uptrend, right? But we're in the middle. And that's why we're not seeing any kind of action to the upside or to the downside. When can we start being a little bit more bearish? When we take out the low, right? Because we're always looking and gauging at the high and the low of the prior month trading activity, right? Just like if you're a day trader and if you're watching the 5-minute chart, and if you're having a 5-minute green bar, for example, and then the next bar is going to be it could be a green bar, but it could be a red bar. It could be a doji bar. It could be any kind of bar. But if it's trading within the 5-minute high and low, it doesn't provide you any confirmation that the price wants to travel higher or lower. Okay. All right. So I'm going to take this off. So we did a little exercise to make sure that we're, pretty much that we're on the same page. So now we have the swing low to the swing high, right? So basically the swing low is coming again into a support zone. So you can see that the retracement that we had here was into a support zone. So what we're going to do right now is we're going to go to the FIB tool, and we want to determine this pullback, how shallow or how steep this pullback is going to be. Now, here's the thing. I use Fibonacci's for this type of particular action, but I'm also noticing that we have a rising 200 simple moving average. As long as the price action in any asset is trading above the 200 simple moving average, I know for sure that that asset still has the capability of rotating or having a very swift reaction into this 200 simple moving average and shifting higher, right? Because institutions love to see the price above the 200 simple moving average, and they want to see the price action, and they're interested in buying. This is their buying zone. And I know that a lot of institutions love to buy off of the 200 simple moving average or around here. That's why we have this very strong reaction, because there were algorithms that was set on buying right off the 200 simple moving average and into the prior support. They had layers of alerts. Now, let's get into Fibonacci's. We're going to trace the low and we're going to bring it all the way to the high. Okay, so we're going to connect the low to the high, right? And so far, this is going to show us where the pullback area, the key area is going to be, right? And you can see here that I have a little bit yellow tracing, right? It's yellow highlighted area. This is going to be the sweet spot. This is the happening place. So if there's a rotation that is going to happen or a shift in price, it should be happening into this spot. This is the massive support. And this is actually the golden means. This is the 61.8%. And this is actually the zone that is very, very interesting for institutional traders as they look at this area for a massive bounce. They actually have their algo set to buy off of these zones. I, as a retail trader that does not have access to unlimited resources and billions of dollars like hedge funds do, I cannot afford to say, hey, I'm going to buy some here, and as it's falling down, I'm going to buy, right? Because this is what they're doing. And institutions never use stops. Hedge funds never use stops. They don't use stops. As a retail trader, I need to limit my risk, so therefore I need to use a stop. So in this case, you can see here, this is the 61.8. This is the danger zone. If the price should start falling, and if we hit this line in the sand, this danger zone right here, then the price action is more likely to retrace back into the prior low, and we would develop a bearish setup. And especially that the price action is going to be trading below the 200 simple moving average. So this is going to be the happening place. One of the reasons right now, and this is not technical, is not related to this session right now, but one of the reasons, so you understand why we're getting such choppy action into the market, is because next week we have the, first of all, we have the CPI and the PPI data coming in tomorrow and Thursday, and these are going to affect the markets temporarily as the market is heading for next week. Next week is one of the biggest weeks in the market because we will have the contract roll in the futures indices. That's why you're seeing lower volume in the Qs and the SPYs. You're seeing lower volume in the futures markets. And also we have the FOMC meeting, and the big deal at the end of the week, we have the quadruple witch option expiration. This whole entire period of time with this week and next week is going to be the roller coaster period into the market. And of course, the biggest decision is going to be factored into the FOMC. But again, these levels are going to play a massive role into that direction. So for example, here, as long as the price action is trading into this yellow spot, it's still trading into the bullish zone, because you can see here that the price action was bought off of the 61.8%. Now keep this in mind, because I want to put up a very important chart of the SPYs, and you're going to see what the level is. So remember that the Qs were trading at the 61.8%. And this is the area where the price should start bouncing. Okay. Now, we're going to take this out, and I'm going to take you a little bit farther here. And I'm going to take you to a monthly chart. And I'm going to show you something very interesting to the monthly chart. And in fact, you know what? I'm going to take you far out. How many of you guys have never reviewed the Q's chart, the Q's quarterly chart, where each and every single candle represents 3 months of trading activity? This is pretty cool. What if I am going to share right now a level that is going to blow your mind? So take a look at this. We're going to do the following. We're going to do the following example here, and we're going to be determining the target. Now, remember 2022 was a little bit noisy. Everybody was saying that, oh my gosh, it's a downtrend. And I have information on my chart stating that it was not, because the price action never violated the 20 SMA, so we were still in the trend. So as loud and noisy as 2022 was, and freakish because everything was pulling back and everybody was like, oh my gosh, my 401k. Okay, if you have a way of protecting your 401k, you should have applied and your IRA accounts, right? Because you should be buying with both hands once you're hitting this 20 SMA. But I want to show you something really interesting. How about determining what the targets are and where the price action is trading right now and why this retracing is happening, right? Because nothing happens by accident. So what we're going to be doing is we're going to be tracing a fib that it's going to forecast the target. So if you were trading here in 2022, and if you wanted to know what is the target, your measured move target for your particular, for your pullback and where you should be protecting some profits, this is the tool that you need to have. And because we're calculating projections, we're going to calculate from the high, okay, to the very low. This is mind blowing. You cannot make this up, guys. So you can see here that the extension right here, you can see the last fib extension, and this is the last swing, long-term swing extension. It's coming right into the high of the Qs. Boom, right? So this is mind-blowing. This is why we're getting the stall right here. Okay, so the price action retraced 100%. It actually challenged a prior high. It moved higher. Notice how this candle, by the way, closed, and the high of the candle is right into this fib. And then we pulled back, and we pulled back almost to the 100% fib retracement right here into this prior high. So when we pulled back into this prior high, and then we launched higher, we stalled, and we punched. We came exactly into target. So these are two ways in which you can apply Fibonacci's. The first example that I showed you was on the daily chart, where obviously as swing traders, this is only, and by the way, this application is not for investing purpose only, but this fib and these alerts you should have on your technical chart when you do your analysis. Even if you analyze one chart per day, remember at the end of the year, you would have over 250 charts analyzed. And that is an impressive amount of charts, and starting with next year, okay? So, and the first example, we showed how important it is to determine the area where the pullback is happening. And in this example, where the price action can run into, okay? The pink line is the 10 EMA, okay? The next question, Raju, when do you do fib like low to high? Low to high. Low to high, I do the low to high. For example, if I would have a pivot here, this is actually a great question, because a lot of traders, you know, they would go like, okay, let's do a low to high. I don't have any reason to do a low to high here. And that is because, let me see if I could get a little cursor here. That is because I don't have a red bar that is going to form the pivot. If I would have a red bar like so, in here that would actually take out the prior candle low, right? You could see here, that would be a sell pattern, okay? And if I have this scenario right here, then I would be able to connect it from the swing low to the swing high. But other than that, I'm not able to do anything, okay? So I would have to go like this. Okay, let me see if I can trade. No, I can't move my cursor. Okay, so I would have to wait for the pivot to form, and I would connect it from the swing low, and I would connect it to the swing high. But the way the price action and where the price action is trading right now, like so, I cannot do anything. My hands are tied. You need to have a confirmation of rotation. Here, you have the rotation. So you have the green bar that took out the prior bar's high. So you had a buy pattern. So this is a buy pattern, and this is a sell pattern. Okay, so you need to have that that buy and the sell pattern. Okay, does that make sense? Okay. I don't use Fibonacci clusters. I don't use Fibonacci clusters. Sometimes you can use, I have a different way of using Fibonacci clusters. And the way I do that is basically I'm creating fibs. If I see rotations, these pattern rotations, so I use these fibs on specific time frames. So I'm using them on different time frames. So I'm using, for example, on the quarterly charts, on the monthly charts, on the weekly charts, on the daily charts, and then I'm seeing if they overlap. But other than that, I'm not doing it. Okay, so let's move on a little bit because we just did the Qs. I just want to show this buys in comparison to the Qs right here. So don't mind this chart because it's a little bit of worked on. But we have the double top formation here. So we have a heavy area of resistance. So what do we do in this case? Like we want to find out the retracement, how far this can go. And this retracement can be calculated as soon as we create that sell pattern. In this case, we have a base here. So we need the base breakdown to happen. So as soon as this candle is going to take out this prior low, these whole entire lows right here, we could talk about a sell, right? And this is a base breakdown. So this is a sell pattern. Okay, so we want to find out how steep or how shallow this pullback is going to be. And later on, we're going to talk about that hybrid Elliott wave that is literally going to be mind blowing because I don't think anybody else knows how to apply that. And a lot of institutions are applying that. And this is super cool. All right, so in this case, we want to make sure that we apply the fibs. I'm going to take these drawings out, not to confuse you, and I'm going to take the fib tool out. And what do? I want to find out the retracement for an uptrend, right? Everybody agrees this is an uptrend, right? So we have the higher highs and the higher lows, right? So what we want to do is we want to pinpoint it to the very, very low. And I didn't really quite do the very low here, so I'm going to do quite the very low. So you have to take your time when you're tracing this because you have to pinch like the very high and the very low. All right, so what we notice here is that after the pinching of the low and the high of this move, we are a little bit stronger in the spike than we are in the Qs, right? Because in the Qs, we have the price almost testing the 61.8%. And here we're testing the 38.2%, right? So we're really above the 50% retracement, right? This is the 50% is just a measure move from the swing low to the swing high. So as you can see, we're already getting a reaction here, but we're already having some resistance here from the 23.6. So if the price action proves to be weak, okay, if the price action proves to be weak, the price action will go like this. We'll go into the 23.6, probably pinch it a little bit, and then we will go lower. In this case, we would have what? We will have a double top formation. We will have the first lower high. And the first lower high, you could start, at this point, you could start shorting with confidence, swing trading, shorting with confidence as the price is moving lower. Okay, and this is option number one. Option number two in here is the price could be rising, right? So the price, you see an inside bar here that we had yesterday. We had an inside and out today, very, very timid. The price action is very shallow today. And we could see the price breaking above here and actually moving towards its double top formation here and here. Okay, so this is action number one, weak price action. We move lower, and this action, line in the sand right here, this fib is going to act as rejection. And the option number two is for the price action to continue higher if we don't look back and we break through that zone again. So does this make sense, guys? Okay, cool. All right. Thanks, Raju. It's actually a simple approach, right? It's a very simple approach. Okay. Do you guys want to do a stock? Anything else then I wanted to do? So like I said, I wanted Meta because it was trading still into the highs, but if you guys have any favorites, just let me know. Okay. Let me get rid of this. How do I get rid of this? Okay. Got it. All right. And I'm going to remove the fibs. Okay, let's do NVIDIA. Okay, let's do NVIDIA because NVIDIA Broadcom is on everybody's, everybody's list. Okay, so here, okay, so primarily we have a high, lower high, and we have the lower high, but this is a context into a back and forth action. And this is actually still into a very much uptrend. So if you're looking, for example, on a monthly chart, right? So on a monthly chart, we're still in a very much uptrend, and we're actually power trending on the monthly chart because the price action is still above the 10 exponential moving average. When we move to the weekly chart, this is just a base, although it has this lower high right here, but it's trading, and we're going to get into the Elliott wave hybrid just a second, is trading into that minor support. And so far we're getting this week very mild reaction. So when are we going to get a strong reaction in NVIDIA? If we are going to close this week, and again, it's very early on the week, but if we're going to close this week as an inside bar, this inside bar will be seen as a decision point going into next week. So we would be bullish above and bearish below. However, this week, our area of interest is going to be above this prior high because our interest is to rotate and to confirm that it's going to the upside. So we don't have any buy signal in NVIDIA at this point. So in NVIDIA, we want to know, and we want to go, for example, let's say we want to go to a, let me just get rid of everything in here. Okay, so we want to go and see, for example, if NVIDIA is going to move lower, where is it going to go? Or if this retracement is enough, or is it going to fulfill this low, and where it is exactly trading at right now? So what we want to do is we'll pinpoint the most recent low. And this is very important, guys. I don't think I've mentioned it. You want to go with the most recent low and most recent pivot confirmation high. And you want to connect the low to the high. And as you can see here, we're still, creating that back and forth action around the 61.8%. This is still a golden mean. This is still a big buying opportunity for institutions. However, I'm using other tools as well. So I'm using the 10 exponential moving average. You can see here, I'm using the 20 simple and the 50 simple and the 200 simple moving average that are helping me add on to my technical analysis for more clarity and more confirmation. So because the price action is trading below the 10 exponential moving average, it's getting that bearish connotation. So it's a little bit more bearish. It's getting bullish pressure from the FIB, from the 61.8 FIB, but it's getting bearish connotation from here. Unless the price is going to start gripping above the 50% retracement, that is going to be aligned with the 10 exponential moving average. So we need to have a close on the daily chart, at least above the 10 EMA. I would have more confirmation to start a position. I also like to look at weekly charts. So like I said, weekly charts are not presenting any kind of setup right now. So they're still all over the place, right? But for those of you that are wondering, where could NVIDIA go, right? So we talked about retracements on the daily chart. Let's talk about some projections. What if NVIDIA is going to recover? What if this week is going to trade above this high? Are we ready to take on a new trade in it? And if we do, what is our target? We will have a first target considered into these highs, and that is for sure because it's created by price action. But what if it's going to start trading above all-time highs here? What if it's going to take out the 140 and change? Well, we have a tool for that, and that is the same retracement tool. That is the beauty about the system. You're using the same tool. You're not using any other tools. So you're taking the same retracement tool, but this time around, you're projecting from the high to the low right here. And therefore, if I pull the chart right here, you're going to see a lot of extensions to the upside, and these are going to be your calculated targets. Okay, so you're going to have a first target right here into the 154, the next one into the 170. So these are, once we start trading into this, let's say 100% retracement to the prior high, then the price action is going to start swishing higher. These are immediate swing targets, and this is more going to be a core target, so a longer core target into it. Okay. All right, let's get to our presentation because we have very little time, and I want to really get into the Elliott wave hybrid. So even though, you know, Fibonacci is a great tool to have, I think it's not enough. And it is a powerful tool. It is a technical indicator that uses pure price action. It can be applied to any instrument, whether you're trading Forex, futures, whether you're trading stocks or anything else. It predicts rotation price points like you saw in the Qs right now that are rotating and trying to hold that 61.8%. You're noticing the SPYs that are trying to hold above the 50%, and that's not a fib, by the way. It predicts targets as well, because you could see that you could use the projections to calculate the targets. But traders must have a really good understanding of the trend, because you need to know exactly how to use the tool based upon the trend. Whether it's an uptrend or a downtrend, it can be used in uptrending markets to predict new highs. It can be used in downtrending markets to predict actually new lows, and not applicable to all market scenarios. So for example, when the market is very sideways, it's actually resting. It could possibly be resting on a pivot or on a Fibonacci or on some kind of area, but it's going to make it a little bit harder. So you got to combine it with other technical analysis tools. So we already looked at some outstanding projections in the fibs. Oh, we didn't do this, the 2008 to 2000. Oh my goodness. I'm going to do this really quick for you guys, because this is literally mind blowing. And how many of you guys in here were trading? Let's do this, guys. How many of you guys were actually trading in 2008? Type a 1 in the chat box. How many of you guys? Bam. Okay, awesome, 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 awesome. All right. And just a quick note before we move into that analysis, which is going to be outstanding. I promise you guys it's going to be fully worth it. Let me share some information with you, and please write this down. The most powerful reversals are happening in October, and I had just happened to have them on charts because I shared this chart on X. Most powerful reversals are happening in October. Remember the 2022 market, and it was like crappy down, and bam, 200 SMA, October reversal. And then we had the 2023 pullback. In October, take a look at October 23rd, we had the reversal. Do you think this happens by chance? No. You know what's happening in October is so important for me to share this with you guys. October is the most, and actually is the kickstart of the last quarter of the year. If there have been funds, hedge funds, institutions that have been sitting on their cash for the summer, for the year, for the month, they're putting their money into the market in the last quarter. You're going to get a lot more infusion of cash into the market. You're going to get more dynamic moves. Take a look at this move that we had in 2023. It was outstanding, right? And we're getting ready. So it's just September. I know it's not even mid-September yet, but I'm so excited. This also coincides with the beginning of earnings season. And guess what, guys? This is the time around October 23rd. You can see it right here. This is October 10th to October 17th. This is the kickstart of earnings season. This is when, and specifically when the big companies are going to start reporting, companies like Apple, Google, Microsoft, Nvidia, Meta, etc. Okay, so super, super cool. All right. So question, will the October reversal still play during the, that's a topic for a different seminar. All right. But usually, yes. Usually, yes, but you're going to see a much more, you're going to see a slowdown a little bit. Okay. Yeah. We're opening a new can of worms. I love the topic, and we do it in our trading room every single election cycle, and we talk about it. But you're going to see a little bit of a slowdown, and you can expect one of the most powerful moves just after election. Okay, just like we had in 2016. Okay, let's get back into FIBs, and then I hope we have time for Elliott waves. All right, so because many of you guys remember the 2000, and let's go to the monthly chart, okay, because it's much easier. Okay, all right, so if you have not been trading before 2008, you should know that there was a peak. This is called the dot-com bubble, and this was in year 2000. And we had the peak in 2007, right? So if you look back, we have a double top. And what do we have here? It's basically a double bottom, right? So if I was to do this, okay, we have a double top and a double bottom, right? Everybody agrees, double top, double bottom. Why not trade it as such? Everybody was freaking out in 2008. And as we were going in 2009, everybody was like, oh my God, I'm going to sell everything. I'm closing my 401k. My 401k is underwater. My IRA account, I'm closing it. I'm pulling my money out. Everybody was pulling their money out here. This is when in 2008, TradeOutLoud came to life. And it was not TradeOutLoud by then. I was acting pro bono because I was helping a lot of traders, a lot of individuals, a lot of friends say, no, don't sell. I promise you, I'm going to tell you when the time is right. And I was telling them about the $75 level in the SPYs. I said, wait for the 75 and buy with both hands. Don't sell. All right. And this is the exact level right here. You see that it went to about 74. I was very accurate, but this is a double top and a double bottom. And I was telling everybody the market is going to go so much higher. It's going to be crazy. There's no devaluation. This is just a financial crisis. This is exactly what I was telling everybody in 2020, right? So I'm going to share with you something right now. Let me just remove this. And by Fibonacci's, I'm going to help you guys with Fibonacci's swing high to the very swing low. Ta-da-da-da. Do you guys remember the base, the wide range that we had, by the way, during election, right? Because we were right here. This is April, this is June, this is August, this is September, October. This is actually October 2016. This is November. This is the top. And we were just, all the way. This is the 1618 level. Once we broke above this level, where did we go? We went to the next level, 2.618. And we stayed here. We created a double top here. We pulled back to the 50. That's why I love to use a combination of price action and moving averages. And we got the rotation. We revisited and we stayed here for a couple of months more. And then we started to move up. Remember, when the distance in between fibs is becoming wider, that is when you expect more volatility to happen. Notice the size of the bars that we've had from back in 2008. Look at 2009. Look at 2011. Look at 2014. This is the first volatility that we had in 2015, the shake and bake. And then we had the wide, where the volatility got wider in 2018. Look at the volatility in 2019. Look at the volatility. And of course, this is the 2020 pandemic volatility. Wow. And then we're back to present, right? So you can see here how this worked out. It's just incredible. All right, so I don't have time to share more charts with you guys, but we're gonna go into the Elliott wave. All right, so by then, yeah, we still have about 10 minutes left. So gathering the intel is so important, right? Because trading is much more than using two tools like Fibonacci or Elliott waves, right? They can help, that they cannot pinpoint the exact entry with the exact stop and with the exact target, even though you have like sort of idea. But the price action is the one that is going to guide you on trailing, right? Because what happens if you take it, let's say, off a fib level and you take the price into the next level? Let's say you get a great momentum, right? And you get a great momentum from that fib, from fib 1, let's say, to fib 2. How do you trail? Will you take out the whole position? What is your game plan? So by using these tools, you cannot actually apply a good trailing system. So you need to have a good price action trailing system associated with them. All right, so you have to understand trends. You have to understand what defines the trend, how to read an incipient change in the trend, understanding price action, understanding support resistant locations, setups and strategies applicable to key zones, and determining laser sharp entries and what constitutes an entry. All right, trend changes are very important, and remember that whenever you're looking for a trend change, you're going to observe the bottom. You're never going to trade the bottom. You can trade the bottom. I trade the bottoms all the time by counter moves, okay? And if that leads to a pullback, which is shallow, like for example here, and I have my lower high, I could actually start trading the lower high as well, okay, with a target into the prior high, and then so on, okay? And the same the other way around. Now, let's talk about the Elliott wave hybrid, which is easier to trade and much more profitable for active traders, and especially for day traders. Like, we don't have like Warren Buffett has like a gazillion of years for his fund. Like, he's taking a trade in he took a trade in 1980 and he's still holding it right now. Okay, so we don't have that. We want instant gratification. And in order to do that, we have an Elliott wave hybrid. You're not going to hear anybody talk about this Elliott hybrid, so you're going to hear it here. So you want to pay attention. So Elliott wave hybrid is translated into a minor support and in a minor resistance. So basically what this is a price level or area that lies just above the prior high of a steady uptrend. So again, you have to have the understanding of the uptrend. And this minor support is only present in uptrends. Okay, so when the price moves, when it retraces, right, it creates a higher low. And when it breaks above the prior high, it creates a new high. And when it pulls back into the prior high. Now, this prior high, this prior resistance is creating that predictive rotation based on which you're going to take a trade with confidence with full size. Okay, because you're already in the trend. That's why trend trading is so easy. Okay, it's so easy. Okay, so the action is going to repeat itself. So once the price action rotates off of the prior pivot high, you're going to find that it's rotating again, trading above the prior high, making a new high, because it's predictive on creating the new highs. And then when the price action is pulling back, it's going to pull back again into the prior resistance high, therefore creating that minor support. So you can see here that we still have the A, B, C, D, but we're acting inside those Elliott waves. So we're not waiting for the whole Elliott wave. If you're waiting for the whole Elliott wave formation, the trade is gone. You're like, okay, the trade is gone. You're too late to the game. And on the other side, the minor resistance is the opposite, right? So when you have the price action moving down, it's creating a support. It's bouncing weak, and then it goes back lower. It's violating the prior low, creating a new low. And when the price action is pulling back, it's actually creating the pullback into the prior low. So this is a great technique for those of you guys that go into the market and chase trades. Never do that, because with the power of the trend, you're always going to get an entry opportunity based on these segments, right? So you're not going to be able. So let's say I am going to miss this breakdown. No problem. I'm going to wait for the price action. I'm going to wait for the price action to move down. And then I'm going to wait. So it's all a waiting game. Wait until the price action gets back here. You want to short, wait until the price action gets back here into the prior support. Then you short it. You miss this. Then you wait until the price comes back into the prior support right here. Okay, so it's waiting. It's going to take probably, if you're a day trader, it's probably going to take like a couple hours, but it's well worth it. This is a trade that we did yesterday. This is a 5-minute chart in the Dow. We did in the trading room. I do have tons of examples, but we don't have enough time right now to share for stocks that we do in the Stock Swing Trader program. But this is a high right here. And you can see that this pivot high, so you can see that the price action went up, went down, price went back up, and when it pulled back into the prior support and the prior resistance area, and it created this support. This is what we traded right here. Okay, so this is the breakout point. This is the rotation that is happening off of the minor support zone. This is the entry. This was the target right here. And you can see the full pullback and you can see the reaction. This is so beautiful because this is a pivot high right here. And when the price action, this is actually where we took the trade. I called the trade right here. So we pulled back. And notice the rotation that is happening right here. You see the rotation. So the price action is curling back up into the same area. This is super, super cool. All right, we have 2 minutes left. So what traders really want, typically they want the holy grail of trading. The holy grail of trading doesn't exist. It's just hard work and it's actually analyzing charts. Technical analysis allows you to trade with precision any instrument and can be used on any time frame, day trading, swing trading, anything. Provides accuracy, confidence, and consistency because it's a rule-based system. Eliminates fear and stress, and you can literally trade with a lot of clarity, creates focus, and helps with pattern recognition and precise locations. So trading is a system. So you can see that in this workshop today, I have tackled a lot of combined strategies. I have applied Fibonacci's, I have applied the Elliott waves, and I've also talked about the importance of moving averages, but more so about price action and the price action rotation when the candle takes out the prior high or it takes out the prior low, whether bullish or bearish. In order for you to succeed in trading, I find that it worked for me. I had to simplify my trading. So time to simplify your trading, eliminate the noise and what's not working for you. Because if you're applying a system that is not producing results instantly, if you're not getting that instant gratification, just ditch it and move on. Find something that works for you. Find somebody that can teach you their strategy that works for them. And also don't believe everything everybody's saying. Just make sure that you ask for performance, right? Ask for performance proof. Are you trading the system? Show me the money. All right, so technical analysis is all about applying these really nice technical indicators that are free, and they're coming with every single chart pattern that there is in existence. But some other indicators that a lot of traders, with the little lights, red, green, pop-ups, whatever, dots, you name it. I've been there, done that 20 years ago, not working. I delayed my learning process, was about 3 months trying to implement that into my trading. I realized that it's time to keep it simple, and it's just a little bit of work on the chart. Indicators are always lagging, by the way. Monthly subscriptions for indicators. And by the way, how many of you guys in here watch the show or have watched the show Billions? Do you guys see like Axelrod buying an indicator on the internet, paying $45 a month just to show him where to buy and where to sell, right? No, that doesn't apply. All right, so technical analysis is going to give you those superpowers, right? The superpowers, and you don't need to listen to anybody else. You're going to have your own conviction and your own opinion, right? To enter trades, use trades. So I don't use fibs alone. I use a combination of moving averages, volume, and I want to see the market participation of fibs, etc. This is my day trading. I didn't have time to post my swing trading P&L here, but this is my my results from day trading futures in the first 9 months. So we're 9 months. You can see here, this is January 3rd, and I actually took the snapshot yesterday on this chart. All right, these are my last day trades. You can see here my P&L on my last trade that we did. I didn't take any trades today. The return, well, I did, but anyways, but it's not in there. So you can see the returns right here. I posted an image so you guys have, an idea of winning trades, the win ratio and everything else. Everything is very transparent. Like I said, I like to offer transparency. If you guys want to follow me, at least you know what to expect.